In 2022, Tesla's share price suffered its worst year in history, losing about $675 billion in market value. The same year Elon Musk bought Twitter. However, social media alone isn't the cause of the sell-off. Despite missing the previous year's auto deliveries, Tesla stock is up 14% in 2023. Here is a look at the stock's rocky 2022, the significant challenges the company is facing, and if the current rise in stock price can last. Tesla has dominated the electric vehicle market for almost a decade, continuing until 2022. Recently, its market share slipped to 61%. According to J.D. Power, around 33 models of EV were available in the U.S. at the end of 2021. However, by the end of 2022, that number jumped to 53 models. Still, Tesla held 4 of the top 5 selling EVs last year, according to S&P Global Mobility. However, the sell-off in Tesla shares shows investors fear that its hold will only last as more models would arrive. Tesla's stock value plummeted in 2022 as its CEO, Elon Musk, took questionable actions that hurt the company's reputation. Before that, Tesla was a favorite of well-heeled auto buyers who wanted to help the environment. At that point, Tesla was most controversial for its build quality and high cost of repairs on older models. When Musk bought Twitter, buyers were more than interested in overlooking these issues. Tesla's problems weren't limited to that, however. At the start of 2022, Tesla forecasted 50% growth, but labor issues and a CEO who decided he could say whatever he wanted to be made that goal challenging. In March, it opened its newest factory in Germany, but needed more employees to fill all the open positions. Approximately 40% more vehicles were sold in 2022 than in 2021, when 936,172 cars were delivered. In Q4 of 2022, Tesla's sales were most affected by coronavirus outbreaks in China, deep price cuts, weakening demand, and increasing competition from legacy automakers. Tesla shareholders and analysts agree that Musk's takeover of Twitter and subsequent antics have not helped the company. Despite being the hottest stock for more than a year, Tesla has fallen into the bear market territory. The stock of Tesla fell 6% Tuesday after closing down 8.5% on Monday, wiping out its gains for the year. On January 26, the stock closed at a record just above $883 and has since fallen. Since December 31, Tesla shares have fallen below $700 only once, to $619 on Tuesday. Tesla shares fell below their level when they entered the S&P 500 on December 21. Also, Elon Musk dropped to number 2 in the list of the wealthiest people on Earth, behind Amazon founder Jeff Bezos. This year, they have swapped positions repeatedly. If you've come this far in the video, consider giving it a thumbs up and subscribe to our channel for new tech news and info. Tesla's stock is selling off for several reasons, including investment in Bitcoin, increased competition, and Model Y pricing. Earlier this month, Tesla announced it had invested $1.5 billion in Bitcoin. Bitcoin's recent rally helped feed the recent rally in Bitcoin, earning Tesla a quick $1 billion profit, more than it has ever made from selling cars. The price of Bitcoin and another cryptocurrency called Ether seems high. Musk tweeted on Saturday in response to a critic of Tesla's Bitcoin investment. Consequently, the Bitcoin price fell 9.3% on Monday, which may have contributed to Tesla's stock price falling. Bitcoin is the smart move at the right time for Tesla, in our opinion, but on the downside, its blame of firecrackers and risks and volatility are added to the Tesla story, said Dana Lives, a tech analyst for Wedbush Securities, who remains bullish on Tesla shares. Model Y and Model 3 prices were cut by $2,000 each last Thursday by Tesla. That brought the price for the standard range Model Y, one that can travel 244 miles on a charge, to $38,490, and the standard range Model 3 to $34,590. The Model Y's cheapest model disappeared from Tesla's sales site over the weekend, leaving only the SUV's more expensive long-range and performance versions. In its decision, Tesla did not provide any explanation. We see the plausible reasons as either the mix was skewed too much to the cheaper variant, and thus it was going to kill their margins, or more likely there just wasn't much demand for the lower variant, said Gordon Johnson of GLJ Research, one of the more bearish critics on Tesla shares. He said that Tesla vehicles don't have the demand that its fans claim, citing the recent price cuts. Tesla can't keep its current factories running at capacity without price cuts, said Johnson in a note on Monday. EV sales have recently been set at ambitious levels by established automakers. Chevrolet recently launched an SUV version of the Bolt, priced well below the Model Y, and announced it would only sell emissions-free cars after 2035. According to Ford, all its car models sold in Europe by 2030 will be electric vehicles. According to several news reports, Apple is also considering entering the car business, through an alliance with an automaker. According to Ives, Tesla's efforts are making some investors nervous, but he expects the global auto industry to shift to EVs quickly enough to benefit multiple companies. Investors got ahead of themselves. On January 27, Tesla's shares peaked a day before a disappointing earnings report that missed Wall Street forecasts. In the earnings report, Tesla made more money from the sale of regulatory credits than its overall net income. Some critics, including Johnson, said it proves Tesla can't make money selling and building cars, although it is profitable by other measures. Musk also mentioned a shortage of batteries for electric vehicles during the earnings conference call on January 27. While Tesla has its in-house battery supply and plans to expand its battery production, the company is still looking for the necessary batteries to build more vehicles. The fundamental limit on electric vehicles right now in general is total availability of battery cells, he said. Musk said that if Tesla had the batteries available, it would have already begun producing a semi-tractor. Shares are still way up. Investors embraced the idea that electric cars were the auto industry's future in 2020, and Tesla shares soared by 743%. Tesla is considered the most valuable EV and automaker globally, with a market value of more than the 8 largest automakers combined, no matter how recent the decline has been. In October 2019, Tesla reported a third-quarter profit that surprised investors, sending shares surging by more than 1,300%. Tesla's stock has been criticized for flying too high by some investors. However, many analysts believe Tesla will bounce back. There is a $950 price target for Ives stock over the next 12 months. Even so, he has a warning. It's buckle up the seatbelt time again for Tesla's stock, with more volatility on the horizon, Ives said. Tesla is expanding its current gigafactories and building new ones. In early 2023, the company filed to expand its gigafactory in Texas and plans to build plants in Indonesia and Mexico. China's gigafactory expansion has been halted. The Texas gigafactory will produce the Cybertruck and the expanded Model Y. Tesla's Cybertruck is expected to enter early production in the mid of 2023, reaching normal production levels by the end of 2023. In 2023, Tesla will manufacture a new model starting at $25,000. If customers reserve the car, this could boost sales. With the launch of its semi-truck in late 2022, sales should also increase. As a final point, Tesla hopes the reduction in production has generated interest among buyers who believe the stock is undervalued. Considering the company's expected growth in the coming years, it is seen as a bargain at its current stock price, which has fueled its growth. During the first 2 weeks of 2023, Tesla's stock recovered about 20% of its value. Still, it remains to be seen how well the company will perform in the coming months. Tesla stock has significantly rebounded so far in 2023 after a rough 2022. As time goes on, it will be evident whether investors will overlook some of the near-term issues with the automaker and continue to push the stock price up due to a fair valuation. Investing in QAI's emerging tech kit is a good option for investors who need to know where Tesla's stock price will go. Artificial intelligence is used to spot trends and choose investments based on these to generate above-average returns for investors. That's it for today. I hope you liked this video. If yes, do remember to like, share, and subscribe. Stay tuned, as we will come up with many new and more informative videos. Till then, take care of yourself. Goodbye.